Howdy, who all my stock market gamblers. Welcome today. It's Friday. Made it to the end of the week, and what a week it was. What's going on today, though? Well, the Dow's up about 200. The Nasdaq's up about 150. This short covering rally is continuing on. But as we end the month of July, I think this short covering rally will also come to an end. We're actually in an overbought condition right now. Now, here's the thing. All right, so there was this tug of war between the bulls and the bears at the 50-day moving average, and the bulls clearly won that tug of war. They pulled it up well above the 50-day moving average. So now I like to take a look at different paradigms. Okay, so that's the daily chart. If you look at the weekly chart, we're coming up right up against the 21-week moving average. Now, that will be resistance. If we can get through that, it's off to the races. But so far, even with this massive short covering rally, we're still having lower highs and lower lows. Until we get above 415 on the SPY, the trend will probably continue. Now, maybe the trend will shift and we'll break through that level. Now, right now, we're up against the 21-week resistance level. Now, my guess is we're not going to get through that. We'll see how that plays out. Now, they are trying to push this market up with everything they got. Now, here's what's fascinating to me. All right, so the Fed comes out, and they raise interest rates by 75 basis points. Now, they told you that they were starting to taper it back in May. Actually, in May and June, they were supposed to be tapering. They're still buying assets. They're still buying them. This is by their own admission. Just go to, their website. Just in the month of July, their balance sheet increased by $8 billion. $8 billion. They're still buying bonds. They're still buying mortgage-backed securities. They're still buying, in my opinion, they're buying stocks through ETF funds. That's my opinion on their trading desk. That's what they do. So yeah, they look good to the public. Hey, we're trying to fight this inflation thing and we're going to raise 75 basis points, but they don't want this market to crash. They got to push it up higher. So what do? They keep buying assets. They keep buying assets to push the market up higher. Very fascinating. The other thing that's fascinating to me is this new spending bill that just passed. All right, $280 billion spending bill. Now, what are they spending? Well, we know there isn't any money to spend because we happen to be $31 trillion in debt. So they passed this spending bill. What are they really spending? Well, they're spending our money, the taxpayers' money, correct? That's just a fact. They don't have the money to spend, but they're going to create it out of thin air, and then us taxpayers are on the hook for it. And now, out of this $280 billion, $50 billion is going to, the public corporations, for the chips. It's going to Intel. It's going to AMD. It's going to the chip manufacturers, right? Now, I don't know if you're okay with all this. To me, it's a little bit worrisome. If we had the money, I'd be fine with it. But because we don't have the money and we're going to print the money, I'm not so good with it because I know that we're all on the hook for this. That's just what they're doing to try to pump this market up. And so far, it's working. You print enough money, you can get the market to go higher. There's no doubt in my mind. And they're going to try to push this up one more time. And I believe they will be successful. We'll see how it plays out. All right, so today I want to move on to, commercial real estate. We haven't talked about commercial real estate in a while. Let's talk about that today. All right, so what do you got going on? Well, in the last 18 months, 200,000 small businesses closed their doors. They just said, we're done. We can't go on. We can't continue. We took the PPP money. It wasn't enough to keep our doors open. We had to close our doors. We had to shutter them. 200,000 small businesses got wiped out. Now, out of the remaining small businesses, 35% of the small business owners did not pay their rent in the month of June. Very fascinating to me. So if you go to your local mall and you see some that have already gone out of business, those stores will be boarded up, right? But the ones that are still there, there's one out of every three of those stores are not paying their rent. They just aren't paying their rent. Now, these shopping centers, they actually have big loans on, big mortgages. So my guess is that a lot of these big mortgages are not getting paid, which technically means that the shopping mall is in default. But the owner of the note for the shopping mall, which is probably the bank doesn't want to take these back. It could be a pension fund. It could be a lot of things that own these notes, these mortgages on the shopping centers. But my opinion that they're just not getting paid. It's a disaster out there, but they don't want to take them back. Okay, so now you got 1 out of 3 businesses not paying their rent right now. Okay, but you have over 50%, 51% to be exact, of small businesses say they will not be in business a year from now unless they get some type of financial assistance. They're going to be going out of business. 51% say they can't hold on for another year because inflation's too high. 51% say they cannot stay in business because they don't have enough business to stay in business. Look, this is a disaster for the shopping center. It really is. Now, that's just one part of commercial property. Let's talk about the office buildings. That's another part of commercial property. Now, office buildings, they're a disaster. They really are. Now, best case scenario, I would say that office buildings right now are, about 30% occupied. And maybe it's a little better than that. I'm going to say give it 40% occupied. There is no way that it's 50%. So it's between 30 and 40%. Okay, 30 and 40% occupied. Now, office buildings, a lot of people don't know this, but they refinance their debt. Not 30-year mortgages like houses. It's every 5 years. Every 5 years, they go and they refinance their debt. Now, the last time when they refinanced their debt, interest rates were, they were running about 3% to refinance that debt. Well, right now it's running about 6% to refinance that debt. So that doubled, right? But the occupancy rate, I don't mean to laugh, the occupancy rate went from almost 100% down to 30%. Now, that's a big drop. So when that person goes to the bank and says, hey, I'd really like to refinance my building. Would you do it for me? Well, are you getting paid by your tenants? Well, 30% of them I'm getting paid by. Well, what about the other tenants? Well, they all have moved out. Look, it's a disaster area. It's a disaster. Commercial real estate is a disaster. No one's talking about it. It's the shopping centers. It's these big sky-rise office buildings. Look, BlackRock has already turned in a couple of their buildings. One in New York, one in Chicago. They just handed the keys back. And they said, we're done. We're out. We can't go on anymore. No one's paying us rent. We can't pay you. Here, have the keys back to the office building. So what do the banks do with these? Well, maybe it's not a bank. Maybe it's your pension fund. So the pension fund, what do? Well, first of all, they got to go. They don't have to foreclose because they gave them the key. They now have the building. So what do? Well, it's on their books. Let's say it's on their books at $100 million, right? Well, they got to have a fire sale of that. Maybe they drop it to $20 million and maybe they can find a buyer for that big skyscraper. Maybe. I don't know what they're going to do with it, but I know that pension funds are in a lot of trouble, and it's because of the disaster going on in commercial real estate. Now, if you're in a pension fund, I'm sure your pension fund's fine, so don't worry about it. But a lot of pension funds, they're in trouble. They really are. And it's because of this commercial property disaster. And the mainstream media, they're not talking about this. No, they're not talking about it. They do every now and then mention that a lot of people want to continue working at home. Well, what does that mean? It means that the office buildings are empty if they continue working at home. That's just how it works, right? But they're not talking about the disaster in commercial real estate. They're not talking about the fire sales that's going to be happening in all these office buildings all across the world, not just the United States. This is a world problem. Look at people people are not going into the office anymore. 30%, maybe 40% on a good day. But the office buildings are over half empty. The shopping malls, they're starting to get empty. And the ones that are still there, they're staying there, sure. But they're not paying their rent. 1 out of 3 not paying their rent. This is a problem. And we see a lot of bankruptcies spiking up, right? A lot of business bankruptcies because they can't pay their rent, because they don't have enough business to pay their bills. So it's estimated. Well, you just go out and talk to the small business owners. 50% of them say they're probably not going to be here a year from now if things continue in the manner in which they're continuing. And I got news for you. I don't see it getting any better anytime soon. Maybe you do. Maybe you think that things are going to turn around really quick and all those businesses will last. I don't see it that way. I see it that these are the good old days when the government's still handing out money to businesses. Just hand out $50 billion to the chip companies. Why not? They got extra money, don't they? No, they don't. They print the money, and that is what causes inflation. Now, it was funny, though. It was funny. So this new spending bill came out, and, of course, not partial to Democrats or Republicans. It's just funny how the Biden administration says that we're doing this spending bill to reduce inflationary pressure. Now, I'm an economist. I've got an economics degree, but you don't spend more money to reduce inflationary pressure. That creates the pressure. The pressure of this inflation was because of all these spending bills. But no, they're going to reduce inflationary pressure with this spending bill. I don't know how it's all going to work out. If you like this stuff, give me the thumbs up. Why not? It's Friday, right? So give me 2 thumbs up. Hey, get out there, everybody. Have a great weekend, and we'll talk again next week. Bye-bye now.